Hey guys, so today we're going to run through an exercise. Now that we've gone through the good portion of support and resistance, supply and demand, and change control zones. Now we're going to run through implementing that and implementing everything together. As of now, everything's been siloed and just kind of one particular tool. Um, it's it's going to take a little bit of practice to start to pull everything uh, onto the same playing field and have it work for you in terms of being easily readable and tradable. But that's exactly why we're going to start running through these exercises. So what I'm going to do here is not introduce any new content, but kind of outline the assignment for this week, at least the first assignment this week, because it's going to be, as I had just mentioned, taking everything that we've learned thus far and putting it all together and making it and doing so in a way that illustrates opportunity for that given vehicle. So, for instance, we have a grid here that's just got two charts on it. The first of which is the euro yen. The second is the is slash 6J, so the yen futures. So what I'm going to do is I'm going to look at the higher time frame on the euro yen on and you are going to do this on whichever forex pair you choose, and mark up supply and demand on the monthly, weekly, 4 hour, and support and resistance and change control zones on the same, and start to look to plan out some swing trades. And on the futures contract that you choose, for me, 6J, you'll be looking at the daily, 4 hour, and hourly, and doing the same but for intraday levels. So with that, let's get started. I'm going to start on the I want the 1 year. I'm going to start on the monthly chart for euro yen. Okay. So let's see. So the first thing that I'm going to do is just go through, and no matter what it is, start left to right, no matter what it is, supply and demand, support and resistance, change control zone, I'm just going to go through and I'm going to mark everything off as support and resistance, because then you can start to differentiate and take things away as necessary. Let's pull that down a little bit. Okay, so we'll identify everything in yellow. We'll start with the top. That may go away, so let's just choose this right smack dab in the middle. We'll just identify this as our monthly. And from here, let's start to see if we can take away some of these levels, or at least change them into something a little bit different. So we've got our first supply zone. So we can take that one away and pull it down to the very bottom. So again, I go bottom of the wick up to the body that started the run up. And here, you can see from here to here, and even up a little bit. So we could really go from here down. Looks to be a bit of a change control zone. The only thing is it's massive. So what I want to do is right through the middle. Let's go high here down to, let's say, right about there. Make this a change control zone. But what we're going to do is we'll leave those support levels right in the middle. So we've got a change control zone with some more precise levels sitting right within the middle. This is good because there wasn't a strong move coming out of that. However, there was here. And this is okay, right? So you can leave yourself some precise levels right in the middle. So we've got our obvious supply zone up top, but we've got a nice little spike that sits right within the middle of that zone there. And so this acts almost as, this doesn't truly act as supply and demand, because you can see that it doesn't just give an instantaneous spike right out of there. So it gives you a bit of consolidation around that. But do remember that when we talked about supply and demand, if you do get that, you get that hesitation, as long as there's a quick reaction off of it, and the next time it's retested, I'd still consider it. So absolutely still going to consider that. And there. And so now our monthly is set up pretty nice. If we go down to our weekly, we'll see what that looks like. See if there's any levels that we may have populated. So if you look, let's say here down, so right where that supply zone sits, you could see, looking left, that we give ourselves a bit of a change control zone. All right, so here's an area that, given what we know about change control zones, that we can start to look for price reversals and either respecting it or breaking through and running north to the next targeted zone. So I'm going to leave that supply zone in there because it acts, you can see, really well, right? This would give us a very precise entry, especially when you start to pair fibs with it. Very precise entry and a huge volume spike coming straight out of those levels. But you can see that the change control zone is a bit more overarching and sits a little bit bigger. That fits nicely within there. And I'm looking at all of this stuff fresh for the first time, so I'm excuse me, talking out loud a bit. Let's change these to a muted purple. Okay, so we've got weekly. So in instances like this right here, where you've got the low spike already marked, and then you've got a couple of tests with spikes just go, past it, right here, I'm going to look for the point that's tested the most. So in this case, it's this line here, because it's tested with the body, with this candle, 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 with this body. So I'm going to look for the point that's contested the most, right there. That gives us a pretty good map on the daily. So if we were to move, let's see if I can extend this, or on the weekly, excuse me. So now we're on the daily. And we've got a couple of decent zones that have already been mapped. So now all I'm looking for is just to finalize and find any shorter term price levels that I may have missed. But this one looked pretty clear cut from the get-go. So right now, right? So now, oh, I'm back on the monthly, that's why. Sorry about that. So now, what I want on the daily is to look for those shorter term clear levels that offer you know what, we could even make that so if we zoom in enough we can make this a nice little supply zone. So I'm going to, yeah, so on the daily we've got a nice supply zone there, and let's look for something dark teal. Let's try that. Yeah, that looks okay. So I'm just trying to again differentiate my, oh, drag too far, sorry. I'm just trying to differentiate my my zones here from daily to, you can see the size difference, right? But all I'm trying to do is differentiate my levels. That's a bit too dark. Let's try and go up one. Okay, that's a bit better. Okay, and then finally we could look there. Ah, that didn't come out. I don't know that there's any way to keep that in the front, so I'm just going to do this until I can figure that out. So what we've given ourselves is now a pretty clear map of level strength, right? So obviously like weekly, daily, monthly levels, differentiated by color to indicate different strengths, and time frames, change control zones that give us, we can expect, you know, quick movement. Like look how quickly price starts to slash through this level, these zones once it's in there. And I didn't spend all the time in the world going back and looking through all of the daily levels I could have plotted out, but I didn't want to overwhelm my chart. So these are the ones that stood out at first. And you know what, we could even add them right there. So now what you give yourself, let's just look at this latest sequence right here. If we were to go 4 hour, right, that's pretty clear cut about where the support is, you know, and now you can even go, you know, further down if you'd like. And yeah, that's not gonna, so you can see that there's a supply zone sitting right at the bottom of that, or a demand zone, excuse me, sitting right at the bottom of this little range here. So you can give yourself all these tools now, fairly clear cut. You don't need to do any more markup, and instead you can just react. So you could just trade this range until broken pretty seamlessly. So you know, enter here, plan to take it off here. Trade or stop accordingly based off of the short-term resistance. And as you zoom in, you can see that those levels become less cumbersome, and you can still capture these major runs. Right? This is the 4 hour chart. This is, what are we at here? 132.12 up to 134. So that's like that's a huge move, and you're doing it without any work on any lower than the 4-hour chart, and you're giving yourself room to be right, room to like, let's take and once we started incorporating other tools too, you can see how this becomes just that much more clear of an entry right here or right here. But that's for a later time. All you're giving yourself now is just a map. So once we break one level, we retest another, or we retest, and then we have a target to the next, to our next side. Let's see. So like right here, we break above, come back down, retest. We clearly break above, hold once, come back down. There's some short-term support there, hold there, enter here, target here, break above here, enter here, target here. And you can, the beauty of this is right now so now we've established shorter term support and resistance here, and we could even change this to, let's change the coloring on this. This is now 4-hour support. So now we break above recent support, finally come back and retest, and now while it looks like it's broken the weekly level, on a higher time frame, this would just be a wick down, spiking to complete this tag right here. So you're creating a new map almost all the time, on no matter what time frame you look at. And again, we start to incorporate, take a look at a little fib run there, front ran it a bit, but now we tag that level, and now we can target here, which is a good short-term run. Maybe you drag your stop up, take half your position off, and then you target here as your second target. But you're starting to give yourself a map just on the just by doing this on 4 time frames that are, that give you clear indicators about where the moves really are. So that will set you up nicely for, can't restore the grid, I'll just do this. That'll set you up nicely for looking towards swing trading. And now we're going to do the same with the indices on, I'll go back to yellow for this, and then we're going to do this the same with futures for starting at the daily. So you could start at the daily or the 4-hour, but you want to always keep in mind the higher time frame bias. Excuse me, but you're looking for more intraday stuff here, shorter term moves, because it is more volatile and gives you better opportunity. There we go. Gives you better opportunity to make quicker, quicker money. So I'm going to do the same thing that I did on the weekly and monthly, just on daily and 4-hour. And then from here, we can look into, it's a beautiful little supply zone. So now what you're going to be looking for is you're going to be looking for your supply and demand on lower time frames. Oops, it's not what I wanted. Sorry, I just reset everything to factory defaults. That's going to mess me up. But now what you're going to be looking to do is give yourself that intraday map just a little bit more clear cut than what you did on the Forex pairs. Okay, so now looking there. So now we can look towards the 4-hour, and you'll notice on because the indices tend to trend very hard, especially the U.S. indices. It's been a massive bull run the last couple of years, and so you'll notice that you'll really get, like, this looks pretty open, right? But what you'll notice is on the 4-hour and lower, you'll really start to get your map, and your intraday map will take shape much better on the lower time frames. So now let's change this to 4-hour, and we'll do it with and keep in mind we're just running through and looking for areas that held and were broken. Like this becomes a nice change control zone. And we can pull that over to incorporate more. So we've now got a nice change control zone to look for some more specific, precise entries. Oh wow, that is a spike up. That was a huge volume spike. That if we pull this over, and got another one. Okay, so that looks pretty good on the daily. Be a couple more that we can add in there. Okay, so that looks good. And now if we were to go down to the hourly, now is where you start to include, if you haven't already, start to include areas that could give you those shorter term supply and demand zones, or just fall back on some levels that you may not already have marked off. So now we've got the hourly. And so now, similar concept, you just look for, once one level is broken, then you look for a retest, and for it to take off towards your next targeted level. And so here's a good example of something that you could mark off as some shorter term supply and demand. What color did I do? Is it that? I don't think it was, but we'll go with it. So now you've got your hourly mapped out pretty well, and you can see that from here would go down to a 30-minute. You don't have to do any more markup on it, right? Come down off this level, maybe you missed this move, you retrace back up to this level, get short, target here, second target here, come back up until we eventually get down, find a new low, spike out pretty well, come back and retest it, and that would end up being a nice retracement. Yeah. Actually, it's a better retracement for the entire run. Yeah, it's a perfect 61.8 off that entire run. So now you'd have, more of a reason to enter long here, come back and retest, or enter long here, take profit off here, second target here, come back and retest, enter long again. Then if you want to hold for the break, retest, sorry, I'm thinking out loud. This is why I don't annotate charts too well, because I just ramble and start thinking out loud to myself. But you could see how creating this map, right, on the higher time frames and just walking down, now you can just open up your charts Monday morning and just start trading. You don't even have to worry about, you don't have to worry about finding new levels. Just trade what's already there, what you've already thought through, what you've already planned out. So really, what the purpose of this quick little, why can't I restore it? Try it this way. So really what the purpose of this exercise is to get you comfortable marking up charts and putting and discerning between multiple different tool types. So change control, supply and demand, support and resistance, because individually you've done well identifying them. There have been a couple of questions around certain things, but for the most part, you guys have done great with the more basic concepts and the simpler concepts that are the three things we've discussed thus far. So now it's just a matter of getting these all onto the same area in a way that makes sense to you so that you can just open up the charts and start trading. So what I'm going to do is I'm going to share my markup for this. Then I'm going to post it in with the video. So feel free to load this up and walk through it. But your homework, if possible, by Thursday, would be to do this. This is where a video is really going to help, because I can see how you're differentiating between the different level types. But again, if you can't, no problem. So I'll post the recording in just a bit, and I will do my best to explain in text what it is I'm looking for too. If there are any questions, comment onto the post, and I will and tag me. I'll get back to you and answer them up as fast as I possibly can.